Welcome to the Meb Faber Show, where the focus is on helping you grow and preserve your wealth. Join us as we discuss the craft of investing and uncover new and profitable ideas, all to help you grow wealthier and wiser. Better investing starts here.
Meb Faber is the co-founder and chief investment officer at Cambria Investment Management. Due to industry regulations, he will not discuss any of Cambria's funds on this podcast. All opinions expressed by podcast participants are solely their own opinions and do not reflect the opinion of Cambria Investment Management or its affiliates. For more information, visit CambriaInvestments.com.
Welcome back, everybody. It's full-on fall time now. I thought about it, discussing this with our guests. I think it's my favorite season. Y'all let us know in the show notes. What's your favorite season of the four? Today's another episode with someone I can't believe is on the show for the first time. That might not even be right. But today's guest is Carl Richards. Carl is a certified financial planner. In a former life, he built, sold an investing firm. He's got a podcast, which is great, 50 Fires, that's somewhat on sabbatical. He's also the author of The Behavior Gap, one-page financial plan. And I guarantee you've seen his drawings somewhere. His newest book is called Your Money, Reimagining Your Wealth with 101 Simple Sketches. Carl, welcome to the show.
Meb, super good to be here. Really looking forward to it. And fall is pretty close to my favorite season too. It's one of my four favorites for sure.
So y'all, Carl's got this awesome book, which you can see. And the format is great. And it reminds me of, we did a thread the other day on Twitter where I said, I'm going to do a thread of half a dozen books that I love that I think most of you have not read, because the criteria is going to be, do they have less than, I think, 50 reviews on Amazon? And shockingly, one of them is my favorite investing book. So I'm a visual learner, and that was Triumph of the Optimist. But what I was getting ready to tell you was that, and we'll post the link in the show notes, listeners, to see how many of y'all have read these. This book reminds me of an old book that I loved many decades ago that no one has read, somewhat outdated, called The Wall Street Waltz. Have you ever heard of this book?
No, I haven't.
It's by Ken Fisher, Fisher Investments, and he does it where he puts a chart, and it's kind of like what Carl does in this book, y'all, when you buy it, because it's great. He's got a drawing, and then on the other side, it's like some commentary. And so yours are all original Carl drawings, but his, would be more like S&P in the 1920s or something.
Right.
So another one to add to your shelf.
There we go. Looking forward to it.
So we got 101 of these. So I figure we'll just do a jumping off point and just talk, because you can see how many of these are dog-eared. But, the first one that I thought was great, and I highlighted, circled, underlined, number 5, which might be, if I was to ask you some of your most popular, here's number 5. Oh yeah. What's some of your most popular drawings? This has got to be one of them. I use Venn diagrams a lot in my discussion, so I think it's inspired by you. This one, and then I'll let you go, but you talk about money in the real world where financial planning exists, but you said money isn't something external life, it's the current flowing through it. I love that. You want to tell us a little bit about it?
Yeah, you probably, speaking of old books, but this one has way more reviews than 50. Remember Vicky and Joe's book, Your Money or Your Life? And that book had a huge impact on me. Yeah. And I think one of the best books ever written. And I loved everything about it except for one thing. And it always sort of bothered me. The title always bothered me because it painted your money as a choice, like it was a fight between your money or your life. And I really think that it's more about alignment. Aligning your use of capital, in this case, money, but we could talk about money, time, energy, and attention. Aligning your use of capital with what's important to you. It doesn't have to be, and I understand the point. Again, in no way am I throwing shade on that book, because I truly, it's probably, if not the most influential, it's in the top 3 books for me. But that, to me, real financial planning is about the alignment of your money and your life. And again, we could talk about that being unfortunate, right? Like, it's a bummer that money is the current flowing through our lives, but it's just the nature of the system that we are operating in right now, that it becomes part of everything, right? Any discussion about anything, right? Money shows up.
And you and I have gotten deeper on this in person and talked about it, but you kind of start out with One of the biggest challenges when you talk about math or physics or something is like you have the constants and the knowns, but with something that's kind of squishy like money is everyone comes to it differently. And so on number 4, you're talking about it where you said, I've asked a simple question to thousands of people around the world. What's the first thing you think of when you think of a dollar sign? And you're like, the answers are never the same. Freedom, security, burden, liberation, anxiety. So there's like my view of your money, your view of money. And it's hereditary, it's cultural, it's lived experiences. And then even as you mentioned about traveling, it changes based on age and what's going on in the world. It's like there's not like a easy definition, not an easy way to think about it. And so when we're trying to talk to someone, it's like talking 2 different languages. You need like a Google Translate.
Totally. I have done that exercise. I just did it with a room of 600 people and then another room of 1,200 people this last week, where I just draw the dollar sign on the board, on the big screen, and just ask, like, what's the first feeling that comes to mind? And it is, like I had this last couple of weeks where I've been doing this, I've had somebody came up to me afterwards. They wouldn't admit it in the room. They came up to me afterwards and you could see it was like deep. And they said, look, has anybody ever said sadness? And I could tell it was coming from a spot of deep sadness. Another lady recently raised her hand and said, lack. It's the first word that comes to mind. Excitement. And I was like, wait, I thought we were talking about a medium of exchange or a store of value. Like I didn't realize the dollar symbol was so provocative. And one guy raised his hand last week and said, that's funny. I don't feel anything. It's super neutral for me. And he was an older guy. And I was like, you know what? I kind of think that's where we're all trying to get. Of course it's neutral. It's zeros and ones in the cloud. But we've layered on top of it all this meaning. Like it's like the tool. It's just a tool. Like you don't have feelings about the hammer or a screwdriver. But somehow we've layered all these stories. And it's largely because of our experience in our lives, like you pointed to, where we lived. What did your dad say to you when you were 6? Like, what was it your friend said? I mean, I remember I had a friend over to my house when I was like 16 or 17, and he lived in an incredibly nice house, and we did not. And we had this old shag carpet in my bedroom. And it was like I don't know when the last time was I vacuumed my carpet when I was 16 or 17, right? It's old shag, kind of dirty carpet. We rented this house. And I remember he spit on it. Now that's terribly disrespectful, no matter who you are. And this is still one of my best friends today. We've talked about it. It's all fine. I did disrespectful, stupid stuff when I was 17 too. But I remember he sort of rubbed it in with his foot. And I was like, bro, like what that's, and he was like, yeah, it's not like it matters. And I remember like being in his white stucco house with the pool in the middle and the white carpet. And I remember the feeling of all of that. And again, this isn't about my friend because he's an amazing guy. And that was just stupid 17-year-old stuff. But the point is, I still remember that. I'm 53 now. Do you know what I mean? Like that story is still looping through my head. And so I think we expect money to equal math. We show up and it equals envy. And I think we get confused and unmoored by that really quick.
Well, it's not just like interpersonal. Everyone in their head is, I'm sure, thinking such a great visual story. I can just see that carpet.
Right. Or a slightly orange brown.
Yeah. We're thinking of our spouse. We're thinking of our parents or our kids. But for those of us who do this for a living, this advisor to client relationship too, so many of the advisors come to it with, their notions and then getting shown thinking about investments and everything that goes with it. So you had one on number 9 where I'm not going to make you read the Zen parable. So listeners, you're going to have to go read it in the book. That's the cost of admission here. But what you talk about is this cool, your balance sheet. And so when people think of balance sheet, and it's kind of your statement of holdings here, listeners, it says large cap mutual fund, grudge against the neighbors, cash at the bank, stock and company XYZ. And I thought this was such an interesting kind of jump off from what you were just talking about, is because we come to this when we're trying to solve these very complicated problems, perhaps of investing, what to do with our life and where to spend our money. But we come to it with all this emotional balance sheet. Maybe talk to us a little bit about that, because I actually never heard anyone describe it that way, and I think that's a really cool way to describe.
Yeah, I was playing around with that because of the word holdings. And then somebody said something separately about like, what are you holding on to? And I was thinking of, I love all these words like currency, cash flow. Like they're all pointing at something really fascinating, and we just kind of throw them around. Self-worth, net worth, right? And holdings is very interesting. Like, what are you holding on to? And then I had this conversation years ago, more than a decade ago, where somebody said something back in the day on Twitter when Twitter used to be useful for many of us. And somebody said, and I understand her point, but she said, being a stay-at-home mom is never a good financial decision. And I remember thinking, I was like, well, that's so interesting. Like my wife's got a degree in finance. She was a CFO of a small real estate company. She knows her way around money, and she has chosen to be a stay-at-home mom for a period of time. And I think if I asked her, she would tell you that was a great investment, right? And I started thinking about, well, like, where does that investment live? You know, like, where does it show up? Because I was like, oh, it shows up on the emotional balance sheet, right? There's a line on our balance sheet, or maybe even also our income statement, that says, right, Corey being home when the kids arrive home from school. And we've put a number there. We've put a value there. Like, I don't know that we've put a specific number, and the value is probably something like invaluable. Like we couldn't put a definition around it. So it was sort of like, wait, that's not what we would say. Just because we can't put a number on it doesn't mean it doesn't have value to us. And that's where I came with this idea of like, it's like we have an emotional balance sheet, and sometimes we store good things on it, like the one I just experienced with a kid, or staying at home, or whatever, getting off on Friday at noon. But other times it's a negative thing, like we're holding on to a grudge against her. How long are we going to hold on to the mistake our spouse made 20 years ago with some money? Like, how long? So that's kind of where that all came from.
Where do you get most of these ideas for the sketches, by the way? Is it on hikes, skiing? Are you sitting in a lab? A picture almost like the architecture draft board, like Walt Disney style. Is it just culmination over the years? How do you kind of come across these? In the shower?
No, it's often outside. I spend a lot of time moving through the mountains, and whether it's on a bike or skis or hiking or trail running. And it used to be that I had a forcing function called a weekly column, right? Like for 10 years, I had to do one every week, and whether I liked it or not. And often I would have a concept that I was thinking about. And then the idea was, okay, how am I going to illustrate that concept? And largely, how am I going to find the one thing that I think matters the most out of this concept and put an icon on it? Like, so I could wrap it up. You mentioned mental RAM. Like, I only have room for one problem at a time. And one of the reasons for the sketches was to kind of wrap everything up in a bow. Lately, it's been more because I've gotten out of practice because I didn't have a weekly deadline. And so now it's interesting. Like, you think after doing 500 of them, it would get harder because you'd like run out of ideas. It doesn't. It gets easier because the muscle's better. When I've stopped, it's gotten a little harder. And then there's other times I hear people say things. I remember hearing somebody say, the line between something and something is awfully thin. And in my head, I literally saw like a thin line between the two words. So sometimes you actually hear people describing things in ways in which you could draw them. So practice is the right answer.
So we're going to skip ahead and then go back. Jumping off this discussion of the balance sheet and baggage, so many of us, and this shows up in my world most, when thinking about investment portfolios, you either come to today, listeners, think about your portfolios, like you inherited some positions or you bought some stuff, I don't know, last month, last year, 10 years ago, 20 years ago. And it's sort of a weird way to think about what you want to hold in the future. And so you look at what's on your position sheet, and you got a good one called the overnight test. And you bring out your brother-in-law. Is this your brother-in-law one? Yeah, this is the brother-in-law test. You want to tell us about the brother-in-law / overnight test?
The overnight test is one of the most powerful things I've ever stumbled across. Because like you said, let's just use so one example, I can remember this with utility stocks. I can remember this concentrated positions from the company you worked for. Like all of those are great. But you have some position that you've held for a long time, and you could use this to decide whether it's still appropriate. But I also really like it when you've already kind of realized, like, this doesn't fit into my plan now, but I'm just going to keep it. And so the overnight test becomes really helpful when you're stuck there, because we're going to change the default is what we're going to do here. So let me give you an example with a cabin in the Poconos. This happened on WNYC on a call-in show. I think this is the first time I formulated the overnight test. Lady calls in. It's like, I've got a cabin in the Poconos. Nobody ever goes there. I don't think anybody's been there for 10 years. I'm thinking about remodeling it. And so I was like, well, okay, well, tell me, like, how much could you sell it for? And she's like, $300,000. And what would the remodel cost? 150. Like, okay, so $300,000 to sell it, 150 to remodel it. I said, well, let's just pretend for a minute that overnight, you went to sleep tonight, and overnight somebody sold that cabin without asking you. And you woke up in the morning and there was $300,000 in your savings account. Plus the 150 was still there. So there's 450,000 in your savings account. And then next week you drive up to the Poconos and you see a place that looks like the remodeled, like the kind of how you envision the remodel it, but it's for sale for 450. Like, would you buy it back is the question. Somebody sold your utility stock your grandma left you, you've held on to for 20 years despite knowing it doesn't belong. The cash is in your account. Would you buy it back is the question. That's the overnight test. And the reason this thing works so powerfully is because we've changed the default. You don't have any status quo problem or endowment effect problem. You have to make an active decision to go from cash back to the thing. And that's why it works so powerfully. And I've almost never, I can't even think of a time when somebody has said, yeah, I'd buy it back.
Never. And we've run through this so many times where there's someone who's stressing. Should I sell this? Should I keep it? And there's a whole host of reasons. You mentioned endowment effect. That's a great one. I think people secretly like to gamble sometimes when it comes to investments, on and on. Should I keep it? Should I sell it? On and on. And then we walk through kind of what you're talking about. Just like pretend you didn't have it. Pretend you had a blank slate. Would you buy it tomorrow? And literally not once ever have I heard someone say, yeah, I would buy that again. You know, so it's such a weird framing that we get stuck in. I don't know why it's so hard to step out of our shoes.
You mentioned a bunch of reasons why it's hard, but one thing that also is, especially if you have lost money on it, there's a finality to loss aversion that becomes a problem. Like, you're going to now realize, this language is so great, again, right? Like, you're going to realize, it's going to dawn on you that if you sell that, you're going to realize a loss. And we feel that pain. It
solidifies it makes the fact that you were wrong permanent, right? It's like, you may not be wrong if you wait.
If you hold on to it, it just could. Yeah, exactly.
We mentioned this on the podcast before. I don't know why I recently thought about it, but I said, one of the best trading systems of all time, if you're looking to be right and you're looking for certainty, this was based 20 plus years ago off an old James Altucher article or book. I can't even remember. But he said 99% accurate trading system is if you buy an investment and you say, look, my quant signal to sell is on the first profitable close. So if you bought it today at noon and it closed, in NVIDIA, you bought it at 184, it closed at 187, you're out. So you made money, sold. But if you bought it and it just closed lower and then it kept going lower and lower and lower, you just never sell it. So you hold it potentially forever, right? So your percent winning trades is like 100%, but then you have these massive losers that are like down 90, down 99.
Yeah, that sounds really smart.
But part of it is like, it goes, people seek that they want to be right. They want to tell people, I told you so, that I was right. And also they don't want to be wrong.
Totally. And again, we don't want to like come to the conclusion that we were wrong. I was just thinking about this the other day and I read somebody much smarter than me commenting on this, that like one of the reasons, and this is a slight tangent, but one of the reasons men will often stay up late is because they've wasted a bunch of time that day. And by closing the day, they have to realize they wasted some time. So you'll stay up and try to do something else and try to, like, you don't want to close It's a, like, you don't want to realize the disappointment of how you behaved that day, which I think is just incredibly sad and smart and spot on. I've noticed that about myself, where I'm like, man, if I didn't do things the way I'd hoped that day, or it didn't go according to plan, maybe I'll stay up and watch something late, and I'm hesitant to go to bed because I'll be closing that chapter. I think that's at play here too.
But I feel like the older I get, the less I care about being right, the less I care about letting go of investments. That part of that maybe being a trend follower, which is just years and years of small cuts, but maybe it's age. But this goes to just things you can control, Carl, which is another great one. And I talk about my mom a lot on the podcast, and you talk about your mom one time at your son's lacrosse game. Can you tell us that story?
Yeah, I mean, this was back in probably early 2001, 2002. I don't know when it was. And I saw my mom. I was at my son's lacrosse. And if you ever watched lacrosse, like 8-year-old boys, it's just 8-year-old boys knocking each other down with sticks is what it is. It's quite entertaining. And I see my mom showing up to the game, and from like 100 yards away, I can tell something was wrong. Sort of one of those scenarios. And she sat down, and I said, "What's wrong?" And she said what all moms say, like, "Oh, nothing." And you got to keep in mind, like, for listeners, I'm sure most of you had this experience. Like, unless you've lived outside of the United States, we don't talk much about currency, right? Like, I mean, I was at a big brokerage firm at the time. I can't remember having a discussion about like a currency trade or like with a client. And I know my mom had never talked about it. So she sat down and said, I said, "No, really, what's wrong?" And she said, "Oh," like with a like exasperated big sigh, she said, "Oh, the dollar. I'm just so worried about the dollar." And I just remember thinking, like, what? I was like, "Have you been listening to Glenn Beck again?" was sort of like the first thing that came to my mind back in the day. But I didn't. I held that back and just said, "Oh, tell me more." And she's like, "Oh, it could collapse." And so I knew she had been listening or reading to something, because there was no other way for her to be concerned about this. But that wasn't the point. The point was, we went on to have a discussion about, like, you know, I consider my mom in control of a lot of things, but she is not in control of what happens to the dollar. And it certainly didn't matter that day. Of course, it would matter if the dollar collapsed, but it didn't matter to her right then. And it wasn't going to matter the next day when she was supposed to be at church, but she was still spinning around the dollar. And the next day when she was supposed to be on a walk with her friends. And so that's when I came up with this. I was like, what? How do we solve this? And I think that plus the serenity prayer inspired the sketch. Like the idea of like, get clear about what I can control and what matters. And maybe it's the reverse, like what matters of that list of things that matter. And I think when like traditional financial planning, you know, the list of things that matter, there's a long list of things you can control. In fact, large chunk of them, like how much exposure you take, portfolio design, the day you're going to retire, how much you save, like all of those things. There's one glaring thing that actually matters a lot, and that's markets and returns. Like that matters a lot, and you have no control over it. And all I'm really suggesting is that we kind of like, maybe that's 10% of the discussion instead of 90% of the discussion, right? Like it's still important, but let's put it in its proper perspective.
We wrote an old piece on kind of this concept on the investing pyramid, on like what really matters, what's your base be, what does the media talk about most of the time. And part of it, and even when like folks like yourself and I get together, we'll get on these podcasts, it's almost like there's an assumption that people know the first 5 layers of the pyramid, because there's no point in discussing them. Like it matters what you save, getting invested early, don't pay huge fees, you know, on and on, like the things that are kind of like well accepted. So what often on this podcast, we'll end up debating, talking about things that are like way out in the distribution, but we often forget that so many people forget about the big one thing. You have an example in your book about, that's near the end, that's great about this, about smoking. I was going to tell you a relative story of a friend of mine, and since we're using pseudonyms, we'll call him Brad. But he was in his 20s and went to the doctor and was like, you know, "Hey, I'm tired all the time. I'm kind of grumpy, can't sleep," like, you know, all these lists of things. And doctor's taking notes, asking questions. And, you know, gets to one point and he's like, "Do you drink alcohol?" And he's like, "Yeah," you know, and again, it's just out of college. So don't be judgmental, listeners. But he was like, how many drinks do you have? On average. He's like, well, on the weekend, I probably have like, I don't know, 20 beers or something. And he said the doctor just puts down his clipboard, takes off his glasses, and is like, well, I think we found the problem. Like, we don't need to do blood tests. We don't need to do like a detailed family history. Like, this is the one thing. Like, this is the thing that trumps all the other 75 things that we're talking about. But I feel like we skip over that so much on end markets. People are like, hot IPO, hot SPAC, this is the blah, blah, blah. Anyway.
Yeah, I completely agree. Like, and that was that. Yeah, you still smoke was that idea of like debating blood pressure medication and then being like, wait, you still smoke? But I'm having a lot of conversations with 25-year-old like hustlers, and they're asking questions about the investment piece. And I'm always trying to explain like, wait, could you get a raise at work? Could you get could you get a slightly better, like, I'm telling you, so many people I know that are 50 would trade their investment experience just for all their money back. Like if the time you're spending trying to figure out how to get a slightly better return could be so much better spent on human capital sorts of things early on. And I think like getting clear about that stuff, like it's not even to move the needle compared to stopping the 20 drinks on the weekend. I wish I had known more of that earlier on.
Well, there's an old post where I tried to quantify that, and it's called basically like how to add yield to your portfolio. And basically walk through and said, here's how much do you make per year? And then how much time do you spend on your investments? Like, look, if it's a hobby, you enjoy doing it, great. But basically in your quest to outperform. So, hey, I'm trying to get a 15% return instead of 10, or I'm whatever, trading, YOLOing into options. But basically quantify the cost of your time and how much time you spend on it. And if it'd be better off, hey, like maybe you could work 10% more hours, maybe you could get a second job, all these other things. And it's like vastly more important, right? Unless your portfolio is like $30-40 million, spending time on it is almost like irrelevant. It's like, can you add more to it? Can you, do the things you want to do?
Yeah, think of like every extra dollar you put in or every extra dollar you save, compared to not saving. Like, what's the return on that? Yeah, it's really hard because I felt the same way when I was younger. Like, no, that can't be the answer, but that's the answer.
Yeah. As you talk about kind of thinking about moolah and what we want it for, a lot of us just kind of hamster wheel. The answer is always more. And you talk about, as a kid, you wanted a bike because your friend had one, but you never wanted a private jet. That's not what you wanted. Like, I wanted a Nintendo. The thing I wanted more than anything as a kid, I think, was a Sony Discman. So like the CDs when they first came out as like Walkmans.
The yellow one or
I had the yellow tape deck. So I had the prequel to that, which was yellow, then the black Sony. I also wanted the Nintendo robot. That was a huge disappointment.
Just imagine carrying around a CD player.
And it would skip. There's nothing I wanted more than that.
Totally. I remember that too. What was the disappointment?
And a waterbed. Oh, the disappointment was nobody wants waterbed anymore.
I had a waterbed in that ugly room with the shag carpet.
I actually love my waterbed. I thought it was great.
Heated, warm when you climbed in.
Yeah. Maybe we bring back the waterbed. Nintendo robot. So in the very first Nintendo, they had just this kind of robot that didn't really do anything. It just like moved a couple gyroscopes around. But yeah, I mean, it talks about just like comparisons. And I feel like this is number 13, and then we'll talk about 14 in a minute. But I feel like this has gotten so much harder in the modern social world of Instagram, right? Everyone posting their best life all the time. And it's like almost a recipe for sadness and not contentment. How do you think about that?
Totally. Yeah. I mean, the first thing, like I just, in that essay, I talk about carefully cultivating your comparison set. And that to me is the way to think about it, right? Like just be careful about what you're allowing into, like cultivate your comparison set, because that's exactly right. Like I wanted a slightly better BMX bike. I first noticed this on 50 Fires when I was talking to people in this sort of age group of, 55 or 45 to 60-ish. And it just didn't occur to them to want other stuff. Why? Because they never saw it, right? Like, and this is a basic mimetic desire problem. Like it turns out we don't know what we want. We are desiring machines. We look to, from the youngest age, we look to what other people want. And we decide we should want that. Like, what does mom want? We should want that. What does dad want? What do the people around us? But now the people around us is the whole world. And it's not even their real stuff. The other day I was complaining about something and my wife was like, hey, would you stop complaining? If somebody were to follow you around and take just the highlights and put them on Instagram, you would be jealous. Like, just the highlights of my life. And I think that's probably true for all of us. So I think the way to be careful about that, like, it's a recipe. It's like, it reminds me of like checking the market every day. That's a recipe for being sad 48% of the time.
Carl, I thought about that. And so, I mean, look, I can at least mentally try to justify it to myself that, I'm doing work, I'm keeping track of what's going on in the world. But the amount of time, I was trying to think of this, I was like, mentally, each time, maybe it's only 20 seconds. But I was like, the amount of time I've probably spent looking at the stock app, if I added it up per day, per week, per month, per year for the past 10 years, like, did I need to know? Like, at no point did that ever become useful information. Like, at no point did that impact my life, additive in any way. I was thinking about deleting it, but I was like, you know what? Tomorrow the market's going to
let's do
crash
it right now.
20%.
Like, where is that phone? Like,
I want to get rid of the phone altogether and go like a light phone.
Here's what's interesting, because it gets worse, right? Is what you didn't add into there was the cognitive residue, the switching costs. Like, you're in a deep conversation, you check, it takes you 10 minutes. You just lost 10 minutes at least, probably more like 15 to 17 minutes. So it's crazy. And you add email and Instagram checking and ESPN and the New York Times, all these dopamine hits. I've recently put another app on my phone, and these are always defensive and you can always find ways around them, but it seems to be really helping. Because, anybody, like, and this is largely me, like, but I know it's true for everybody else too, because I've seen the data. If you tell me there's a thing you really want to do, you just don't have time, in my head, like, whenever I say that, there's now an automatic script that plays, like, it just says, cute story, bro. All I have to do is look at your phone. I will find you an hour and a half right now.
Yeah. Per day, probably.
Right? But yeah, an hour and a half a day right now to get in better shape, to eat better, to write the book, to start the podcast, to sleep. Like, I don't care what it is you say is important to you and you don't have time for it. I would find the time on your phone, and you'd find the time on my phone too. So, like, we're all in this together. That is a gunfight that we have a knife. Like, the only way to do that is the nuclear options, right? Like, because there's 300 PhDs on the other end of that bet.
I love not just your drawings, number 15, but I love the stories because they give me visual images. And one that stuck out more than almost anything in the book to me, talk about money and the things. And cars, I feel like, is the one that everyone always thinks about. So in your neck of the woods, maybe F-150, Rivian SUV, just fancy, like, gorgeous. I mean, look, I love cars, trucks. You have a good analogy where you're talking about the neon sign above the heads. You want to tell us about that one?
Yeah. Now, listen, I'm not sure this is a good idea. I just think it's an interesting thought experiment, right? Like, what if, because there's so much, man, we get so deep so fast on assumptions and stories because we see somebody driving something and we immediately make an assumption about, we almost make an assumption about how happy we think they are. And the happiness is that, I think, at a fundamental level, like, that's the unit of comparison. But the problem is there's no units of happiness. So it's not like we know. So we proxy in the things we see them owning. And so what we really proxied in now is consumption. And we think we proxied in wealth. We didn't. We just proxied in consumption. And so, man, we've made this whole series of assumptions that are really faulty. And I've been curious about the big hat, no cattle. I can't remember who first said that statement. Somebody from Texas, probably. But And sometimes in, where I live, and where you live, you run into big cattle too, right? Like, but often it's big hat, no cattle. And I always wonder about, what if there was a net worth sign that followed you around? And again, I'm not saying this is a good idea, but I bet it would change the way we view things. Like if somebody gets out of their daily driver Lambo at the coffee shop with their little vest on and it says negative 500,000, like you think differently. And I'm not even saying that's a good idea to think differently about them. It shows how judgmental I certainly am, but you think differently about that. You certainly tell yourself a different story about that. And I think the reason I like this example so much is because I've had more conversations about this thing that are conflicted, like, oh, is that a good idea? Is that a bad? Why do we even care in the first place? Like, why? This came up on 50 Fires with Joel Stein, who's hilarious. I was telling him, like, why do I want to, I'm going to be very careful about this analogy. I just mean it metaphorically. Why do I want to punch that guy in the nose? Right? The daily driver Lambo with a little vest with a little logo on it at my coffee shop. Like, why do I want to punch that guy in the nose? And he was like, well, because he wants to punch you. And I was like, no, I don't think that's why. But it's so interesting to just think about, like, that's a problem with me. It's not their problem they're driving whatever car. That says something about me. What does it say about me? What does it mean? I want to live with that question while I walk through the mountains a little bit. So that's the kind of thing that neon sign brings up.
Well, I think when I see that guy, because he drove 50 miles an hour from the one stop sign to the one block ahead, and it's like louder than 10 leaf blowers in the neighborhood. And we're like, bro, you can't even physically go 50 miles an hour between these two. Anyway, so
you're pointing to the same feeling I have.
It's almost like a health monitor in a video game but it's like, you're like, actually, this car is not a $500,000 car. It's a minus $500,000 car because the person's borrowing money or whatever. Anyway.
Yeah. And I think the slippery slope on that one, though, is like suddenly, like if I have, there's some judgment being placed on somebody's value, and I don't mean that in the positive. It's only useful to me in the like daily driver Lambo direction. It's not useful to me with, $5,000 working really hard. It's just useful in the big hat, no cattle idea.
Thinking about the creep, the hedonic treadmill, this is a good one. Luxury creep, number 17. And you were talking about your neighbor, Homer, who lived on the street for 50 years.
Actual name.
Yeah. Well, sorry, Homer. You get a shout out in the book, so maybe you get a free book.
Right.
But you're talking about a house in the neighborhood. Talk to us a little bit about his response to it's too small for...
Yeah, he'd been there, honestly, I think it was 50 years. It was in our first house. It was in this beautiful walkable community in Salt Lake. Still amazing. The houses haven't changed much in there. And I'm standing outside, sort of as you do with somebody who's been in the neighborhood forever, both of you with your arms crossed, facing the road, like leaning back and forth, having it like, why did you see that? Like, and he was like, I think it was the Johnsons, as I recall. Why are they moving? Like, they had I can't remember what it was, their second or third kid. And Homer was like, no, the family that raised 7 kids with the Johnson. Homer was like, he said, why are they moving out? Oh, they had their 3rd kid. The house is too small. He's like, the Johnsons raised 7 kids in that house. It's like, it's so like, don't you remember when air conditioning was an option on the car? My car, I didn't have air conditioning. Walk-in closet.
But it did have a cigarette tray.
It did, and a cigarette lighter, but a walk-in closet, your own bathroom. But now those things are like necessities. It's fascinating how easy that creep is.
We did a fun little thing for my mom, which I would encourage you to do, listeners. It's a fun project anyway, just to talk, and for our generation who still has parents, but anyone who's getting older and even not older. And the company went out of business, but I think there's a bunch of these others where you could hire basically some writers. I think it was a couple $1,000. They'll interview a bunch of your family members, basically write a book about this person's life, and just mainly put a lot of pictures in it. But you got to hear a bunch of stories that I didn't want to forget, and want my kids forget, on and on. but was telling one, she was like, "Oh yeah, my father was like the first to build a radio in his town, like the first one to have a TV." And then my son's like, "What are you talking about? Like what do you mean?" And they're like, "Well, yeah, the TVs weren't a thing back then, right? You know." And just trying to think about all the other things we take for granted now, which, you know, is just, it's become table stakes versus luxury.
Yeah, I totally remember like moving the antenna around on the TV, adding extra tinfoil to it to get, yeah, for sure.
We're going to jump around a little bit, but I liked when you were talking about, think about markets. There's a phrase that Mark Yusko uses. I can't remember who the origin on it is, but he says investments are the only business when things go on sale, everyone runs out of the store. And as we were talking about cars, you were using a Land Cruiser. My first car was an 83 Land Cruiser, which I love more than anything. And I think I donated it for $0 because it was a couple 100,000 miles on it. Wish I still had it. But this might be, is this Carl's number 42? Is this your most famous chart? I see this one all over social media. Do you know this one?
Probably so, yeah.
Greed buy, fear sell, repeat until broke.
Yeah, it was on the cover of the first book. And I think, you know, I'm not the first person to draw a squiggly line. Like, that's for sure.
But you draw a really good squiggly line is the deal. You know, you really do.
I think it was the repeat till broke. Ron Lieber at New York Times said about, because that first appeared there in the column, is he said that my best work is confrontational without being off-putting. And this is an example of that. Like, the more people say, sort of like chuckling, "Oh man, help me stop doing that." You know, like, and one of the analogies I heard once is, I thought was so great, was what made The Simpsons so great was no matter how dumb you were, Homer was always dumber. And I like, that's one of the goals here, was to give us permission to kind of enter into our own absurdities and see ourselves and our own absurdities in a way that would allow us to have a conversation about them.
I think, you know, so much of your book and writing centers back around on, like, why are we doing this in the first place, you know? And you had a great one. Can't remember which number it was. I got so many folded down, but it's basically like, you know, when you get to your deathbed and you look back, like, what do I regret? Am I glad I did this? Like, no one's going to say, "Hey, you beat the index." Like, I'm glad I outperformed the S&P. What they're going to say is, like, and you said it more of a financial planning framework, like, did I meet my goals? Like, did I do the things I wanted to do? Like, what's the whole point of having this money in the first place? I don't know what number that is, but it might just be all of them. But there was one you were talking about that I thought was, oh, here it is, number 50. I'm sitting on it. See, look at the serendipity. The book revealed itself. Reaching my goals, beating some index. What do I want to talk about, right?
Yeah, I think that's super interesting. The thought experiment was, like, let's just hypothetically imagine a world in which you outperform the index every quarter, but you didn't meet your goals. Both of those things are hard to imagine, but imagine you were able to outperform the index every quarter. If you could do that, it's still possible to not meet your goals. And then on the flip side, imagine that if you never outperform the index, in fact, you don't even know how, like, but you met all your financial goals. Like, which one would you be more happy? If I could stay the course with that and not get distracted by sort of headline risk, everybody else is doing so much better, like all of that garbage. So I think what that does in my mind is shift the framework from what I want to measure is progress towards my goals. The rest doesn't matter. Like, I just want to measure progress towards my goals. That's what really actually matters. And that implies that you have to actually care enough to have a conversation about what your goals are, instead of just trying to outperform your neighbor, right?
Carl's famous in Manhattan Beach because there's an office as I walk downtown to get coffee that has a bunch of his sketches in the front window. So I sent him a picture the other day saying, "Dude, look, you're a famous artist in Manhattan Beach." There's one that I think at this point in time, I mean, look, no one knows what the future holds. No one knows what market's going to do. But there's some kind of decisions that people make that eventually get lost to the dustbin of history. It happens time and time again. Someone makes $1 zillion, someone loses all their money. You know, these are stories as old as time. But you have one on number 54, which, you know, it talks about a close friend, late 90s. His portfolio was crushing it and YOLO'd everything into what was working and then kind of lost it all. I heard someone say the other day, they're like, sold their business, their life's work. And then someone's like, what are you doing next? What are you putting? And I was like, it's kind of boring. I just put it in the S&P. And I kind of take a deep breath and say, look, the boring part of that, it just makes me so nervous about being in these environments where I haven't seen this one. This was a new Carl to me. There it is. The diversification. That one doesn't have any words. That's just 4 symbols. I love that one.
It's one of my favorite ones. It's been around a long time. And that was one of the earliest ones. If you'll even remember this, that story was, he had Alliance Premier Growth and Davis New York Venture, large cap value, large cap growth. And every year, 97, Alliance Premier Growth outperformed. And he was like, get rid of this Davis. And his advisor talked him into holding it and if not rebalancing. 98, get these guys, these Davis New York, 99, his advisor talked him into it. 99 was the final straw. Because Alliance, as I recall, Alliance Premier Growth did 54% and Davis only did 17. And I remember this conversation either like Christmas or New Year's of 2000. I finally got rid of those Davis people. Moved it all to Alliance Premier Growth. And then, Alliance Premier Growth is down like, I can't remember what the number is, 60, 70, 80%. Yeah, it's so hard to remember, right? Like things change. If you do diversification right, there will always, if we could just rewire our brains to realize the fact that there's something that you don't like, if you're invested like an adult, like broadly diversified, there should be something in your portfolio that you don't like and it will change. It may take 2, 3, 4, maybe even 5 years to change, but it will change. That's a sign you're doing something right.
It's a sign it's working.
It's a sign it's working. That's exactly right. The whole concept is working.
I could do one more. I don't want to give away the whole book because Carl, people got to go buy it and they should. Everyone, this is really wonderful. It's kind of like, instead of next time y'all go sit on the toilet and scroll stock screens, you can just take Carl's book and this will be.
I was thinking about this over the weekend, like travel. I was in the airport and for the first time, like almost everybody had their phones out when I went into the bathroom. And I was like, wait. I thought this used to be a thing that if you did it, you at least tried to be discreet about it. And then there was an article in the Times today about, is it okay to read on your phone on the toilet? And I'm like, no. I mean, and again, I'm not guilty for this, but there's a couple of, anyways, we don't need to go there.
That's what a toilet book is for.
This book was designed. I was calling it a bathroom book and my agent said, no, call it an airplane book.
But it's perfect because it's bite-sized. You can just pick it up, read a little bit, or it's almost like one of those devotionals at night. I have one on my calendar on my counter that I really like. It's the New York Times, like recipe of the day. I'm a sucker for those tear-off calendars. This is such a good one because you were talking about number 64, talking about news, which is just constant. It's shifted, right? It's not just CNBC. It's now Twitter, Blue Sky, Sora, whatever the next one is. But talk to us a bit about, talking to people about like how they think about the news.
I remember asking this question, like asking somebody, and this question's in the book, like try to recall a time when you read or heard something about money in the news, you acted on it, and then later you were glad you did. Outside of like a tax law change, it was hard for people to come up with examples, right? And the question that I asked is like, well, why are we watching? Because this sketch, it's a big circle. In fact, you can see it, you'll have laid those in here. The big circle labeled noise, a small circle labeled information, and there's a teeny little dot labeled stuff that might actually be useful. The only feedback I've had on this sketch is that teeny little dot that's labeled stuff that might actually be useful was way too big. Right. So I just think like, let's just get clear about what we're doing here. Are we like, is it entertainment? That's fine. Like the circus clown, like juggling, fine. Is it important for you to be informed at work because it's what you talk about? You could make an argument that that's okay, right? Have something to talk about at lunch. Are you running from something? It's just a great dopamine lever. Like, okay, but it's not going to be helpful in terms of your investing. Maybe in terms of your speculating, like to help you be a very active speculator, great. But it's typically not going to be very helpful in terms of your investing.
Yeah, I would argue it's probably 180 degrees in the opposite. Anytime someone does anything from emotions and markets, and all the research backs this up. So we just published a piece, listeners, you can go check out. I haven't really publicized it because I actually don't think it's one of my best pieces. It's called When to Sell, and it's a piece that I've held of the hundreds, I don't know, thousands of articles written over the years. It's the only one that I've like not been able to finish. And the topic of the article is you bought an investment. Okay, like when to sell it. Because almost every single person, when they buy something, they may have put in research into it. They may not have. But then you ask, you're like, okay, well, what are you doing with it now? And usually we'll see how it goes. That's the usual response.
Right,
I bought it. We'll see how it goes.
Right.
And I'm like, what does that even mean?
Yeah, we'll see how what goes. Yeah,
Right.
exactly.
And the translation is, we'll see if it outperforms some arbitrary index, which changes. Maybe it's the SP, maybe it's gold, maybe it's cash. And then if it wins, you're brilliant. They probably buy more. If you loses out to that, they'll sell it over a 1 to 3 year time horizon. And so we kind of walk through, hey, here are the terrible reasons to sell. Here are the reasons maybe that are reasonable to sell. But I actually only wrote that because I wanted to now, this is very childish of me, but when we talk to, and these are institutions, listeners, so this isn't really individuals. Individuals is somewhat expected. Institutions, like I want to be able to like send them the post and be like, all right, so just remember the reasons you bought this and remembers the reasons you considered selling it, and then realize the reasons you are selling it, which is almost universally news flow, performance chasing. But it's hard to get out of that hamster wheel, I guess. I don't know.
It appears, I mean, like back to the idea of memetics and watching what other people do, it appears as if that's what it means to be a super smart investor. Like, of course you're going to follow the news. Like they're calling in from London, for heaven's sake, right? Like these guys, this is super smart. Look, the suits are so nice. Do you see that stuff in the background? It appears like it's this giant appearance problem. It turns out that we're more interested in appearing like we're great investors than actually being one.
Do you have a favorite of your sketchbook? Like that's a hard question to ask.
I know I've gotten asked that twice today. So you're the third person who's.
Of course, you're going to get asked that. That's like a terrible interview question. It's like, what have you read recently? Just spin it.
No, I'm really enjoying some of the early. Like there's one, which is sketch number 11. It's just scarcity and abundance.
I love this one, actually. This is a great one.
Yeah, I think a lot about, because there's a real juvenile version of abundance mindset, right? And the law of attraction. And I think the book, The Secret, was one of the most harmful books ever written about money, because all it did was highlight the juvenile version of something that's true. Of course, if we focus on something, we're going to see more of it. And so there's something really powerful and true about having a mindset around openness, expansion, and abundance, because we'll more likely live in a world like that if we have that mindset, more likely. But I don't know where the line is between that and the juvenile version of like, all I have to do is wish for it and the universe will provide it, right? So I love thinking about that. Remember when my wife was pregnant the very first time? I couldn't believe how many women in our town were pregnant. Because it was like, I started noticing. Or if you want a new red car, you'd never seen one of these cars before. You want one and suddenly they're everywhere. I think there's something true about what we think about, what we focus on, and carefully cultivating that and working to establish that. And it doesn't mean, like, I can think all I want positively about tomorrow morning, I'm going to wake up, there's going to be a box on the front door with $1 million in it. I could do that every second between now and tomorrow morning. And in the end, the probability of that event occurring is a random draw. And the probability is very, very low that that's going to happen, as close to zero as possible. Right? So I love thinking about that juxtaposition. I think it's, there's a line in here. Scarcity and abundance are a function of perspective. They're almost like a posture we adopt independent of our circumstances. It may not be about getting more. It may be about learning to love what we already have. And that's the thing that's clicked for me recently, is like, maybe this abundance stuff isn't about manifesting something in the future. Maybe it's just about learning to love what I'm already doing.
Who said this to me? I think it was Barry Ritholtz, talking about celebrating the milestones as they come, celebrating things that happen just in the daily life, being happy with even the little things and not resisting the temptation to skip over them because we're on some treadmill to get to the next thing that we're always trying to, race towards. Celebrate the little things along the way. Speaking of little things along the way, what's next for Carl this year, next year? The future? What do you think? I love brainstorming with you because you always got a bunch of ideas going on. What are you thinking about?
I am trying to do what Barry suggested and just enjoy. The reason I wrote this book after 11 years of saying no to any book idea was to force this, to use it as a forcing function for conversations. So I think I'm going to spend a year or two. I mean, I don't know that that's true, but right now I'm planning on spending a year just having conversations like this. The more, the better, all around the world, all around. Like, I'm tempted to get a Sprinter van and just drive from FPA chapter meeting to FPA chapter meeting or CFA chapter meetings, and just how can we have more conversations about money and enjoy it? I mean, I'm already thinking about the next one. I love the format of this book, but I'm trying not to think about it. I'm trying to be like, I'm just going to enjoy this for a bit.
You can park at our office when you come out to LA. Perfect spot for a Sprinter van. We got a lot of extra parking.
It's so fun.
You can't leave during ski season, or else maybe only go to the ski venues, do a Western tour, go up to Canada,
just chase powder.
Yeah, Powder Highway. I'm curious, by the way, and it's not out in the wild yet. You haven't birthed this yet, so you've only kind of gotten the responses from, the previews. I'll be curious to know which ones end up kind of resonating, that find kind of where people are like, oh man, I loved 77, or this one is like perfect for my practice, or like this one hit home, because you never know until people read them, right? Be curious to know which ones.
Yeah, I need to start because I've done probably 50 podcasts over the last 4 weeks, and I need to start.
My goodness gracious.
It's been so fun. Like, they've all been like, none of them nearly as good as this one, but they've all been so fun. But I need to start keeping track of the ones people ask. Enough is enough. People have brought up a lot. Spend the money. But what I loved about this was it was a tour of some of the ones that I actually had a commitment. Yesterday, I did a big keynote someplace, and I was like, I'm going to only use ones that I almost never use. Because I have some tried and true stories, that focus and fear and greed. And
it's like Dana Carvey going to give his old jokes from 20 years ago. Like, it works. You got to do a little Chris Rock, new material, see if it bombs, see how it goes.
That's exactly right. I love that debate between Chris Rock and Seinfeld. Like, Seinfeld's like, nope, greatest hits. Chris Rock is like, nope, newest material. And I love that. So I've enjoyed that too. I'm curious about it too. I think we'll kick the letterpress print business back up again because so many people are asking for like artifacts to frame. So we'll do a bit of that as well. But I'm just going to enjoy this book for a while.
So if listeners check out the book, Your Money, Reimaging Wealth in 101 Simple Sketches, can people find you on the reg? What's the best places? Where are you hiding out on the internet these days?
I mean, the best place is the weekly letter we do every week for the last 12 years. So you go to behaviorgap.com to get that. If you don't like stuff in your inbox, I would say Instagram and LinkedIn are probably the two places my material. I try to stay completely off of them, so please don't be. I do read every email I get. So I've taken all that social media energy I used to have and devoted it to newsletter. So I think you'll be surprised. You send me a note, you get interaction there. And I've taken that from if you want to just follow along, Instagram's a great place to just follow along. And it's all at Behavior Gap everywhere.
Great. I'm going to come to you with advice on some new pair of skis, some new gear.
For sure. I can help you spend your money.
Perfect. Carl, it's been a blessing. Thanks so much for joining us today.
Cheers, man. That was super fun. Thank you.
Podcast listeners will post show notes to today's conversation at mebfaber.com/podcast. If you love the show, if you hate it, shoot us feedback at themebfabershow.com. We love to read the reviews. Please review us on iTunes and subscribe to the show anywhere good podcasts are found. Thanks for listening, friends, and good investing.